video, I want to do an update on the equities market, Bitcoin market, tied into CPI, follow up on the video I posted, I think 2 weeks ago. It'll be short and sweet, but I just want to keep it to the essentials. So basically in the last video I uploaded, I mentioned that, we were waiting for that CPI data release on Wednesday, July 12th, 2023. I was saying that, if that CPI data release came in showing CPI declining below expectations, that we'd see the equity markets rally. And we actually saw that data release that came out on the 12th. And, the CPI came in at 3%. I think the expectations were 3.1%. And the previous reading, the month before, which would have been June 12th roughly, was 4%. So you see this, I'm not sure exactly what it was down here, but you can see month after month you get this dramatic decline in CPI, and that's sort of like the catalyst for the equity markets to start this rally. And you saw a continuation of that effect here on July 12th, which is what we were talking about, and then you see the market rally off that news. So we're good on the hourly chart. You can see you got that data release here, the market gaps up, and gaps up on a Wednesday. That's pretty big deal. And then rallies into the close, and then closes a little bit higher the next week, this current week. So if you put a price extension on that, you got basically a 4.25% price extension over 2 weeks. If you were to do that again, say you just hypothetically say the market continues, another extension of 4.2%, you're basically at the all-time highs. And so, I'm sort of looking at the market in the context of CPI and in the context that, we have a CPI data release every month, right? So we had one July 12th. We'll have one Friday, August 12th, roughly. It's not exact. The 12th of August will be a weekend, so it won't be on the weekend. But, you get the idea. You get a monthly CPI. You can put one roughly October 11th. So you get month after month CPI readings. And I'm just assuming that, if we get a continuation in decline in CPI, that the equity market will continue to rally off that news. Now, I don't know necessarily if the market will necessarily take out the all-time highs before August 11th or whatever the CPI read is next month. That's yet to be seen. It certainly could happen. We still have 3 weeks, and if you get 3% expansion a week, that puts you at all-time high by August 11th. But again, that's not necessarily a guarantee. You could, even if you have continuation, you could be somewhere up here by the August CPI data release. So, a breach of the all-time high may, also based on where we're at, kind of be dependent on that August CPI data read coming in below expectation. But I do think it's very critical. I think this is what the market's moving off right now. And but I guess I would go out on a limb and say, I don't necessarily know if the all-time high will be taken out before the next CPI data read, but I think if you will see some degree of continuation, and then again, if the August CPI data comes in pretty low, I think that definitely will probably serve as a catalyst to take out the all-time high. And then, if the all-time high is taken out, then the equity markets will get very, very steep, even much steeper than what we've already seen. I do want to highlight that because, at the risk of getting ahead of myself, we haven't necessarily taken out all-time high. I'm just laying out scenarios. If you do see a further collapse in CPI, possibly even, a more dramatic collapse than what we've already seen, you see the all-time high getting taken out. Things can get very parabolic very quickly and in a way that people sort of aren't expecting, right? And I think it's helpful to be prepared for that. Again, it's all sort of contingent on CPI collapsing. I think if you do get a CPI read, that comes in hot, comes above expectation and shows that, hey, actually CPI isn't collapsing, that something different's happening, then that's a major warning flag. And probably, who knows if it marks the exact top in the market, but It's a major warning flag to pay attention to, and I think if CPI comes in hot at any of these dates, that could potentially mark a local top. So I think that basically is my entire thesis in a nutshell. I'll go over to Bitcoin, just show you this trade I've got on paper trading account. Down to 857 Bitcoin. Still a pretty big position opened. Let's see. Yeah, I don't have a strong opinion on whether this consolidation on Bitcoin breaks down. That being this consolidation up here. I don't have a super strong opinion on it. It definitely could. You've seen a lot of liquidity runs in this area, and I'll just highlight them here on this chart, and then we'll zoom down and see those. But let's see. I mean, this is this type of behavior is sort of indicative that price maybe won't retrace into this level just because of the liquidity hunts you've seen. So you got your initial one here. That's not really that significant because we're really talking about recent price action, but it's a good example. Have price come down, run these stops below here, price comes up, and so we can move these off the chart because once a liquidity hunt has already been ran, once these stops have been ran here, then they don't get ran twice, generally speaking. So we can take this off, and then we can see here, actually we can take this one off too. So price ran above the range highs, had a little bit of a stop hunt up there, and then slams back down into the range, runs these lows right here, pops back up, runs the lows again, pops back up. So it's sort of how you saw that here. You see like price run the liquidity above these stops up here and then slam back in the range. Well, on the flip side, you saw that on this side of the range here where price ran down, stopped these guys out, ran up, stopped these guys out here, and then popped back into the range. That's sort of an indication that liquidity was ran below these lows and that these lows are going to hold, actually. Generally, if you were going to see price collapse here, you'd probably have seen price already collapse. But I definitely don't want to put that type of restriction on price. I am, largely speaking, looking for a run into this area here. I actually will start bidding Bitcoin if it runs into this level, just because you got this beautiful trend that's played out. You run up, run down, run up, run into these highs. Same thing, run into these highs right here, run up, and now these highs have yet to be run into. Again, it's not a guarantee that price has to do that, but these are the areas I'd be looking at. Now on the flip side, what areas would I be looking at to see if price takes off? Well, again, here we sort of had this stop run liquidity hunt. To me, this type of price behavior indicates that price is actually a little bit more likely to return into the range than break down from here. But then sort of what type of reaction you get up at the top of this 618 retracement. You could potentially create a swing high here where you've got this lower high, this higher high, and then a potential swing high formed around the 618. I think this area is a major focal point in the market. If liquidities ran up here, but ultimately this consolidation is ultimately going to break down, I think you probably would see that focal point right here. And by that I mean, I think it's a decent place to be looking to take a short position, and a very clear place to manage risk above these levels. Yeah, very clear swing high right here. Now I know people might say, well, there's been a series of liquidity runs above the highs. How do you know that price won't run above the high again for liquidity and do the same type of characteristic. There's no guarantee, but I would say that the fact that it's already ran liquidity multiple times at these levels is, and done it dramatically in this fashion right here, is probably an indication that, now people are looking for that to happen again, and that's probably the reason why it won't happen if these highs are taken out. I do think if these highs are ran up here, taken out ultimately, then things get very parabolic. You can see this, this market run up very quickly up to this level right here, fill this inside gap, this area of inefficiency right here, which actually represents the greatest area of inefficiency in the entire bear market, right? Because you'll see right here, you got some of this filled to some degree here, but you can mark it off. You essentially have this area where price didn't spend any time consolidating, basically $5,000 gap, or 14%. Let's see what we had here. Yeah, here is a much smaller gap, but just to put things in perspective, I do think if the highs here at 31,800 are taken out, then you see a run up into this gap, fill this gap, ultimately up to 3777. Could make a run for these highs up here. Who knows? But this area would be the area where I'd start looking to take profits, and potentially enter into a short position. Although any short position I would enter into would primarily be based off whatever characteristics are forming on the right hand side of the chart, as opposed to the left hand side. Now, I do obviously pay attention to historical price action in these areas of interest, but really what's more important to me is seeing what's happening on the right-hand side of the chart. And, even if price is running up to a historical area I'm interested in, if it's not starting to break down, I'm not going to enter a short position. It's, on the way up, it's sort of the equivalent of, catching a falling knife on the way down. I guess on the way up you might refer to that as standing in front of the train. But yeah, just because price revisits a historical area of interest, I'm not necessarily going to stand right in front of it. I want to see price kind of stall at that level and start to break down, on a 4-hour hourly chart. Let's see. Now, in the macro big picture, I'm sure everyone wants to hear that. If you do, if things do pick up from here and go parabolic, it probably fill this gap pretty quickly. And, admittedly, price probably does run up into a little bit higher into this consolidation. And potentially, if things get really crazy, you've got this fib retracement on the entire swing, and you can see a run up into the 618 retracement, taking out the highs above this area here. And that's really an area where, again, might be getting ahead of myself right here, but if price did run up here, I would really be looking to sell in this area between these highs right here when the stops are run up, and then, this top up here, this 50,000 to 60,000 area roughly. With that in mind, I wouldn't necessarily be looking for if price were to run up to the all-time high, I would not be looking to short the all-time high. And one of the reasons why I wouldn't be doing that is, a lot of people are looking for another throw over of the all-time high. And the reason why they're looking for that is because that's what happened the last time price tested all-time high. You had this run up, and then a throw over, and then a collapse. And of course, naturally, people are always looking for the last price distinction around that all-time high. Just as in the last all-time high, last time price reached all-time high, it just ripped through. So here, people were looking for it to rip through because that's what happened the last time. course, the market didn't do that. Now people remember the last time and won't expect it to rip through. Again, there's no certainty there, but there's no certainty in anything you're dealing with in the market. I think if price did run through the all-time high, then you see a very quick run up and a spike, potentially up to, say 100,000 or some very aggressive movement above these highs into uncharted territory. But if that did happen, something to keep in mind is that if this all is playing out before the halving, which is in April of next year, say, you did break above the all-time highs prior to April, that would also be uncharted territory as well, because within each Bitcoin cycle, Bitcoin has never, breached a prior all-time high before the halving. So, that you could, if you get very extended before the halving, that's probably where you would see some local tops start to form, whether that's above this high here or somewhere above the all-time highs up here. Again, I'm sort of getting ahead of myself, but if those things did occur prior to the halving, then those would be areas I'd be looking to sell or looking to distribute. Anyway, I hope you guys like this video.